cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Just over 13 minutes left of trade. Time for your last chance trade. Stephanie, what are you going for?
Win, which is pretty controversial because we know that China obviously is in decline. Macau is 75% of total revenue. So you have to believe that Macau is in the process of bottoming, which I do. And VIP, high-end, also is in the process of bottoming. I don't think it's going to be this month per se, but I think in the next couple of months. So I'm slowly accumulating a position here. The stock's down 40% from its high, trades at 10 times EBITDA, which is 2 standard deviations cheap versus its 10-year average. So in other words, this thing has been battered down, and it's a best-in-class company, good management, great assets, really cheap.
I guess there's quite a lot of binary things at play with Win. And the biggest one, which is not a sort of this year factor, but it's a couple of years out, is whether they get their license to operate extended,
Sure.
which by all assumptions will happen unless the US-China trade war escalates. So it's a sort of, if things get much, much worse, it goes almost to zero if it doesn't get its license extended. But provided that doesn't happen, then...
Yeah, I mean, you're right. That's binary. But I think between now and then, a couple of years out, I think you can make a lot of money in the name, number one. And number two, I do think they'll negotiate somehow, some way. They're not going to lose 75% of their revenue base and 78% of their EBITDA if they, lose this contract. So I think that the risk reward is just attractive here. And it may just be a trade, which is why it's called last chance trade.
Correct. We're also going to get Lululemon. Wanted to talk athleisure for a moment. I know you've been buying Under Armour, but we're going to get Lululemon earnings just a few minutes. So here's what to watch in the release. The 3 growth drivers for this company: digital, men's, and international. Those are the double-digit growers, and that is why Lulu stock has been a monster. Take a look at Lulu just against some of its competitors in the athleisure space. Nike, Under Armour, Adidas this year. Only Adidas has performed better. But even going back from the last quarter, guys, the market has basically done nothing, up 1.7%. Lulu's up 6%. And so 12% comps are what the market is expecting. And the company has managed to deliver, staying true to its brand and its consumer. It has been an outlier in all of retail. So my question is, why are you going with Under Armour? Because that was your last chance trade.
Yep.
A few weeks ago, I think, and it hasn't done that well.
No, it hasn't. It's down, which is one of the reasons it's down a lot. It was up 40% on the year. Now it's only up 10% on the year, right? I still think the turnaround is attractive at Under Armour. I mean, this is what a turnaround is. You have some good quarters, maybe some not good quarters, but I do think there is an end game here, and that is to improve the company and their operations. And they're hiring new people. They've got now a nice management suite, so it's not just Kevin Plank, and they are executing. And so
they are, and they're improving the operations, the inventories, the margins, the profitability. The missing component, though, has really been top-line growth. Are they able to get back shelf space? Are they able to do any sort of mass market innovation that appeals? They've had some successes with the Rock and the Hover platform.
Yeah.
And that's where the question lies.
That's exactly right. And a lot of it is, not only was it product, but it was also their supply chain. Their supply chain was really in a bad shape. And that is one thing that they went out and they hired someone just to fix that supply chain. So I think if they actually have the right product, which I do, in pockets, that they can actually see an improvement. And I do think that the international opportunities are enormous for this company. They're just beginning at this point. So to me, the risk reward at Under Armour is a little bit more attractive versus Lulu, which has been just a wonderful performer. I've owned Lulu in the past.
Is it too late if someone wants to get in?
I just think it's expensive, but they have the product. To your point, they're really growing men's nicely. Canada is doing quite nicely, but they now come up against very tough comparisons. Last year they did 10% constant currency, so we'll see. Great company, just valuation has always been a little bit rich.
Okay, 10 minutes to go before the closing bell. Here's where we stand. Dow's just off session highs. It's up about 377 points. So nice gains across the major averages and across sectors. Let's take a look here. In terms of performance, it's still technology and financials that are doing the best today. Utilities and real estate at the bottom of the list.
Coming up, 2 big exclusive interviews you don't want to miss. Box CEO Aaron Levy is here to talk about Starboard's new stake in his company. And Kimberly-Clark CEO Michael Hsu will break down the state of the consumer. Those interviews just minutes away.
When I lost my sight,
I can find and fund my car, from a Mini to a Jaguar.
Feel-good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Don't just track an index. Help me meet a client's need.
Is the fund built to sell or built to last? ETFs are only part of a portfolio, so make it easy to explain.
Give me a quality fund that helps me get clients closer to their goals.
FlexShares ETFs are designed and managed around investor objectives, so you can advise with confidence.
Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out.
I got a new grill.
And you should be mad your smart fridge is unnecessarily complicated.
Make ice.
Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading today.
The Closing Bell is sponsored by E-Trade, the original place to invest online.
Welcome back to the Closing Bell. Just over 5 minutes left to go. We're higher, healthily higher, as you can see, 1.5% or so on the Dow, S&P, and the Nasdaq. Only 3 sectors negative, all defensive sectors: utilities, real estate, and staples, tech, consumer discretionary, financials lead the charge higher.
We've got under 5 minutes left to go in today's session. Time now for the closing countdown. Let's trade the close. JJ Kinahan joins us, Chief Market Strategist at TD Ameritrade. JJ, how are your clients feeling? What kind of flows and sentiment are you seeing as we watch this market really rebound to under 2% from a record high?
Yeah, you know, days like today, I think, and yesterday, if you look at them together, it shows that there is a definite pent-up demand for equities. And you start to see it, and I think you really start to see it when you look at the financials overall. That's one area where our clients have been coming back in the last couple of days with a little bit of encouragement, you know, from bonds. It's the old bond get smashed, banks get boosted. And that's exactly what you're seeing over the last couple of days. And you are seeing stocks like Goldman Sachs, JP Morgan, starting to draw some interest over the last couple of days.
JJ, we're, as Sarah mentioned, much closer to the recent all-time highs than the recent August lows now. What are the key levels you're watching in terms of breakouts to the upside from here?
Yeah, I think, well, if it's really tough, you know, to say that we're going to get much outside 3,000 to the upside here, which, you know, we're knocking on that door currently, and then 2,800 is to the downside. You know, it's great that we're getting back to the table with Asia, with China in terms of what's going on with the tariffs, et cetera. But without any real progress there, other than we're getting back to the table, without anything definite, I don't know why anybody's going to be going in and saying, all right, this is all done, we're buying with both hands. And as we get to the downside, it's the fear of missing out in case things do get settled. So without some really definitive things coming out of these upcoming scheduled talks, I find it very hard to believe that we can go much to the downside. You know, although we've had a lot of intraday volatility, as you guys report on all the time, you know, more in the last 25 days than we had in all of 2017, we don't really we haven't really gone anywhere in 52 weeks, which I think has really been the toughest part of trading for most people.
JJ, thanks for joining us. Good to see you. Meantime, let's send it over to Mike for the third installment of the dashboard. Hey, Mike.
Hey, Will. Taking a look at some of the market's vital signs to see if this has been a healthy stretch in the indexes above that August range. Take a look at the advancing and declining volume. It's basically 3-to-1 to the positive. That is certainly healthy, although not overwhelming to the upside. A lot of times when you get these big momentum push days, you want to see more than 80%. But we're already starting with a 5% gain off the lows. Maybe not surprising. New highs, new lows on the New York Stock Exchange handily to the advantage of new highs. That's definitely a positive sign. That factor has turned for the positive. Look at the VIX. There's a one-year chart. Pretty clear downtrend in the VIX here from those August highs, about 24. Something similar in the spring, got down to 16, and then you went to a kind of a deeper trough as the market stabilized. Hard to say, though, because we are still in volatility season. Let's get a look at bonds with Rick Santelli.
You know, it's been a big day. I'll take you around the world in 30 seconds. Look at the two-day of our 10s. We're up 10 basis points, and we're really firm, even though we're not on the highs. Let's go to the UK. They're up 10 basis points, but in the last 2 days, they're up 20 basis points. Finally, Italy. All the ire about how they were so much lower in yield in the U.S., and indeed they are, but they're up 14 basis points today. And the winner in percentage terms of the three major indices and stocks is the NASDAQ, and for more on the NASDAQ, let's go to Frank Holland.
Hey there, Rick. You know, chip stocks, especially those with a high exposure to China, really pushing the NASDAQ to a two-day win streak. NVIDIA shares up more than 6.5%. It gets more than 50% of its revenues from China, along with Micron up more than 4.5%. Broadcom and Skyworks also trading higher. The SMH ETF trading at its highest level since July 30th. That's a key date. That's when the U.S. said it would give licenses to American businesses to continue their dealings with Huawei. Tesla also trading at its highest level since July. It's not a great day for caffeinated drinks and video games, all those having some of the worst days here on the NASDAQ. Now over to Seema Modi at the New York Stock Exchange.
Thank you, Frank. A strong day for stocks here in the U.S., but overseas as well. It's important to note that similar to yesterday, the gains started overseas. China ending the day higher by 1%, Japan up 2%, even Europe joined in on this global market rebound despite that lackluster factory orders number out of Germany. At the highs of the day, the Dow was up 481 points. So we are off the highs of the session, but industrials, tech, big bangs playing a big role in driving the Dow up triple digits. There's a closing bell. Dow closing at 26,719, S&P 500 at 2975, up 1.3%. Energy, one of the lackluster moves of the day.
If you're just joining us, good afternoon. Welcome to the Closing Bell. I'm Wilfred Frost.
And I'm Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up on Wall Street. Very strong day. The Dow closing up 373 points, 1.4%. S&P 500, good for a gain of 1.3%. Its fifth gain in the last 6 sessions. The NASDAQ leading the charge up 1.75%, though the Russell 2000 index also having a very strong day. Every group within the market was higher, Wilfred, led by tech and financials, except for the defensive plays that have benefited from low yields like utilities, real estate, and staples. It was a reversal of that whole trade with yields popping today.
Yeah, yields big factor. 10-year now back above 1.5%, 30-year above 2% by quite some margin as well. Decent move there. Even you saw a bounce in copper as well, which has been weak of late. Oil managed to hold on to the flat line. So
had some good data.
Broad risk-on sentiment. Good data here. Not so good. As Seema mentioned, by the way, we should keep that in mind in terms of German factory orders. Lots to come in this next hour of the show, including Box CEO Aaron Levy, who'll join us in just a few moments. We'll hear also from Kimberly-Clark CEO Michael Hsu. You don't want to miss any of those particular interviews. But let's dive in to the market discussion. Joining us still Stephanie Link, Head of Global Equities Research at Nuveen, a TIAA company, and Jim Paulson, Chief Investment Strategist at the Leuthol Group. But Mike, if I start with you, kind of continuation of yesterday's theme, and you've also seen the VIX drop further still. pretty bullish sentiment out there.
Yeah, the market's making the case that what we saw in August was just a little bit of an overshoot in the direction of recession fears, dragging bond yields well below probably where they fairly should be given U.S. fundamentals, and also getting investors positioned in a very cautious, fearful way. So all that stuff with about a 6% or so decline, peak to trough in the S&P 500, was pretty extreme. A lot of that's being reversed. We basically have the economy in terms of trend we thought we had in July. A lot of the data now pretty much confirm that at this point with the domestic consumer. And bond yields are a lot lower, and investors are not positioned for further strength in the economy. So I think that's why we're seeing this repricing. Does it really get you to escape velocity in terms of economic optimism and all the rest of it? No. But I do think it shows you that low bond yields are a benefit when the credit markets are still functioning well as they are right now.
Well, Jim, it started with a headline about the U.S. and China talks, trade talks, China being back on in October. I mean, been here, done that. How many times can the market trade like this off of the whiff of talks?
I don't know. It's been pretty profitable to trade on that for several times now. So traders, it's a haven. I guess it just continues. It hasn't done much for investors though, because as Mike says, we're going nowhere fast, mostly up and down, and haven't escaped out either side of the trading range here yet. But Sarah, what I'm most drawn to, I think back to that fateful tweet when talks broke down. And we had the August debacle here, and we're kind of back up to the top again. What has changed, in my view, is that I think the economic momentum, economic reports, surprise indices around the globe have really started to break out to the upside. If you look at like Westpac's Global Economic Surprise Index, it has really made a significant upside breakout. And you can see economic surprise indices are way up here in the United States. It actually went positive here just today.
Where around the rest of the world? Pick out some countries.
Look at Citigroup Economic Surprise Index wealth in Europe. It's turned up in the last 30 days. Japan has been strong. Canada's just turned up last 30 days. Even the emerging markets are higher. Even China's gone up of late. Here in the United States, we went from -70 2 months ago to +7 today. So I think that there is some gravitas to what's happening here. The market not only refusing to break down significantly in the face of all this concern with yield curve inversions, negative yields, and trade wars, but also the chance that it could break out to the upside, and it continues to increase, regardless of what the Fed does, only because economic momentum seems to be shifting more positively.
Is that a sign, I wonder, Steph, that stimulus still works? I mean, that's what we've done this year from central banks around the world.
Well, fiscal stimulus works better than monetary stimulus, I would argue. But I do agree with what he was just saying in terms of the economic surprises, because look at the Baltic Dry Index. That actually is also now at a new high, too. So we're getting kind of signals that things are they're not going down anymore now. What does it do for global growth? I mean, are we going to still see slow growth? Absolutely, but maybe not recessionary, and that's what we were pricing in. So happy to see the leadership today very much. Happy to see a decent economic data. Now we get tomorrow's data, and hopefully everything doesn't turn upside down.
Mike, does the market still get spooked as it gets close to the all-time high label, even if that was first made quite a long time ago?
Yeah.
Valuations might be better, or interest rates might be lower?
It often coincides with an area where it seems like a logical place to stall out. I think that happened earlier this year for a little while. But honestly, I don't think it's necessarily we're going to look at that 3,000 level and say, oh, this is impenetrable somehow. I do think, though, the pattern has been making a new all-time high. It's been relatively brief. We've done that 3 times in the last year and a half, or 4 times, without it necessarily being, lasting.
Jim, do you think the policy support that is expected to come from a lot of the developed world in the coming weeks, is that already priced in, or is that an extra boost to come?
I think if it comes as an extra boost, Wilf, because what I've been fascinated on is not what the ECB is going to do now or what the Fed may do now. It's what the market's already done. Well, we've taken the entire yield curve, except for the very short end, and dropped it by 150 basis points in the last 9 months in this country. We've had similar long-term interest rate moves across the globe, in China, in Europe, in Japan, in Germany. The German bund was plus 80 basis points in January 2018. It's now minus 60, so there's been a big easing by long-term investors there. So we've got money supplies up, we've got yields down, we've got fiscal stimulus here, and the lagged impact of that now approaching 9 months to a year, I think is just starting to have its normal lag and is going to start to have positive benefits. One other thing I'd point out that's different right now from what it was when Trump tweeted a little over a month ago is we've just had a tremendous increase in fear evident. We've had so much talk of recession. If you do a Google's trend search on the word recession, and it looks like flat as a pancake since the 08 crisis, and it just shot up to levels pretty close to 08 just last month. So there's a lot of fear combined with better fundamentals. It's always a nice combination.
Are we going to Lululemon? Not yet.
Yeah, I mean, we could hit the earnings. It looks like another strong quarter out of Lululemon. I'll just hit the main numbers here for you. It looks like a 96 cents a share, earnings per share. That was higher than the 89 cents that analysts were looking for. Revenue also beating estimates, $883.4 million. That was better than the expected $845.5. Comp store sales for Lululemon up 15%. That was better than the 12.2% expected. 55% growth margin. I'm going to continue to dig through these results. But guys, again, Lulu having a very strong quarter, beating Steph already high expectations on a stock that has
unbelievable
rallied so hard over the last year or so.
Yeah, I mean, it's up 8% since last quarter alone versus an S&P of only up 2%. So it certainly has outperformed. These numbers look great. I mean, to have a comp number like that against a 10% constant currency comp number last year at the same time, that is so impressive. And it just speaks to the momentum of the product, not only with women's, but also men's, certainly. You're in early innings with men's. You're in like the second or third inning with that.
A lot of international growth ahead for them, too.
And I bet also DTC was also probably really pretty good as well.
Strong.
Up 30%.
Yeah.
I mean, that's why when we talk about comps, they include online in their total comps, which is not really
31%
because it's comping against the same internet that was last quarter. But I mean, yes.
But their store comps were up 11%,
yeah, 11%.
which was a lot higher than actually expected. People expected around 5%, so that's more than double.
Does this reflect poorly on Under Armour?
No.
Or are they separate?
I think they're separate, but I think the underlying trends of athleisure is still very, very strong. And I also own Nike, and I think this will benefit Nike as well. It all depends on what you're looking for. I mean, Nike is your steady Eddie, right? Your quality compounder. Lulu is your growth. And Under Armour is your restructuring value play. And so I wanted to have quality and value, or I could have just made it easier on myself and owned Lulu, but I just feel like the valuation was a little high for me.
Men's is still doing really well. The men's comps were up 27%. They're seeing strength in tops and bottoms, according to that. Revenue 21% in North America. In Europe, what company is growing revenue in Europe 35%? I mean, that's a new company there. They're just sort of setting up shop there, but
not many.
It's been a weak spot for a lot of companies across the spectrum. And then the only other numbers that I'll point out, which are just crazy growth numbers, e-commerce comps in China, for instance, up 80%. So
that's awesome.
When they talk about the runway for growth internationally, they like to put out these numbers to show the double-digit growth there.
Yeah, and I mean, as much as I kind of poke fun about them, including online sales in comps, online represents about a quarter of the business right now by revenue. So you don't have a lot of chains that began as a physical format that have a quarter of sales direct-to-consumer growing that fast.
They're also raising their outlook for Q3 and for full year 2019.
And you have to also appreciate the operating leverage in general. So not only are you getting this top line great growth, but you're also seeing controls on the cost side. And that's really a wonderful combination for operating leverage so that you see great earnings growth on the bottom line, right? So that's what's really happening here. And that's why you get a re-rating over time.
We will leave the discussion there. Stephanie, great to see you as always. Jim Paulson, our thanks to you as well.
Thank you.
When we come back, we will take the pulse of both the tech and consumer sectors when we hear exclusively from Box CEO Aaron Levy and Kimberly-Clark CEO Michael Hsu. Closing bell.
Separately. Looks like it's a double.
Back
confusing
in 90 seconds. 2 different interviews, 2 different pulses, both in the same hour.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Oh, I found one of our new Vauxhall Griffin editions.
Yes. What comes as standard?
Standard? Well, alloy wheels, sat-nav, aircon, DAB radio, Bluetooth, smartphone projection and USB connection.
Wow. Is that everything?
Sorry, forgot the colour touchscreen.
Buy a new Griffin edition, Adam, Astra, Corsa or Mocha X Plus and get a whole host of features as standard. The Griffin edition range. All Griffin, no bull. Visit your nearest retailer now. Vauxhall, British brand since 1903. Participating retailers only. Limited units while stocks last. Ah, what's better than being at one with nature? How about being at two with nature? Get a 2-for-1 companion voucher valid for 2 years when you spend £10,000 each year on the British Airways American Express Premium Plus card. Probably best not to go for the silent retreat then. Search VA Amex to find out more. Representative 76% APR variable. Annual fee applies. Applicants must be 18 years or older. Subject to approval. Terms, taxes, fees and carrier charges apply.
Welcome back. Stocks rallying for a second straight day on optimism over trade talks with China. Let's go to Seema Modi for the big movers at the stock exchange. After that, Frank Hollander and the Nasdaq. But Seema, let's start with you.
Well, while prior trade talks have not always yielded a lot of progress, markets were encouraged by these another round of trade talks that are now set for October. Putting this move into perspective, the S&P 500 is now trading at levels hit back in July before President Trump escalated tariffs on August 1st, and then we saw China respond by allowing its currency to fall below 7. Other interesting factors in today's move, we've seen the dollar now down about 1% in the past 3 days, which is a boon for those multinationals that generate revenue outside of the U.S. Interest rate sensitive sectors sold off, so utilities and real estate, and even gold seeing its worst day of the year. As you guys were discussing, retail, a notable outperformer, not just the specialty names like Urban Outfitters and Abercrombie, but even the big department stores like Macy's and Nordstrom. Sarah, back to you.
Seema, thank you. Tech stocks driving the Nasdaq higher today. Frank Holland with the details. Frank.
Wait, Sarah, you know, this 2-day win streak was really led by the trade news and, of course, chip stocks, especially those with a high exposure to China. NVIDIA really leading the pack, closing 6.5% higher. Also, NASDAQ transports. We don't talk about them a lot. We're going to show you the chart. Big jump here from just yesterday on that trade news. J.B. Hunt, the nation's largest container ship there, up more than 3.5%. Other trucking names really surging. Not a great day for caffeinated drinks, soda, coffee, candy. Bad day for them. Pepsi, the worst performer in the NDX. Back over to you.
All right, Frank, thank you. Those stocks still trading near all-time highs. Meantime, activist hedge fund Starboard Value disclosing it owns 11 million shares of Box Tuesday afternoon, amounting to a 7.5% stake in the cloud computing company.
Meanwhile, Box unveiling a new cybersecurity initiative. This comes as Twitter is trying to bounce back from its own cyber hack, during which CEO Jack Dorsey's account, among others, was compromised. Joining us now in an exclusive interview, Aaron Levy, Box co-founder and CEO. Aaron, thanks very much for joining us. Good to see you.
Thanks for having me on.
Talk us through your new cybersecurity initiative. What's fresh about it?
Yeah, so we just launched a new product called Box Shield, and what Box Shield does is it helps our customers be able to deliver more advanced security capabilities around their content and their collaboration. So we work with some of the world's largest banks, pharmaceutical companies, media organizations, and governments, and Box Shield will help both bring intelligent threat detection to how they work and collaborate, as well as let them better classify their content for more advanced security use cases. So if you imagine an M&A transaction that a bank might be working on, you want to be able to ensure that there's no data leakage that happens in that process, and you want to be able to be alerted to that. Or if you're a media organization that's working on pre-release content, you want to make sure that that doesn't get accessed by the wrong parties. So Box Shield takes our core security and advances it even further for our customers. So we're very excited about that. There'll be a new add-on product that we're releasing this quarter in Q3, and that will be available as a part of our broader Box Suites, which brings all of our add-on product capabilities together for our customers.
I don't know if Twitter is one of your customers, but is it something that can prevent all these hacks from happening, high-profile ones, including the CEO?
I think it might be hard for us to solve the Twitter issue. That was a little bit more of a cell phone hack that occurred with the cellular connection access. But in our case, what we're going to do is help customers be able to prevent accidental data leakage or accidental access to information from outside parties, or again, malicious access to information. So banks, governments, pharmaceutical companies, media organizations, global manufacturers are going to be able to protect and secure their content as they collaborate with their partners, their customers, and their clients.
Aaron, we wanted to ask about the Starboard stake. Have you spoken to them? Do you know what the motivation is for their buying?
Yeah, so obviously we tend to not comment on individual investor conversations, but we do collaborate with our investors, Starboard included, and I think overall they see an opportunity where Box's shares have been undervalued by the market, and frankly, that's what we're focused on driving, both by re-accelerating the growth rate of the company as well as driving a greater profitability in the business. So we're very aligned with Starboard's interests, and we look forward to collaborating on them in this process.
Yeah, I mean, it does raise the question, Aaron, for skeptics and people who wonder about the valuation. Why can't Box be more profitable more quickly?
Yeah, so as we have reached greater and greater scale, we're nearly $700 million in revenue is what we guided to this year. That's driving greater leverage in our business model, which will ultimately drive greater profitability. Just last quarter in Q2, we delivered our second quarter ever of non-GAAP profitability. So we're proud of that milestone, although we know that we have way more work to do. So as we continue to scale, you're going to see greater leverage in the business, which will drive even better operating margins and profitability. And I think what Starboard and other investors are focused on is really how can we accelerate that and get there even sooner. And that's something that obviously we're focused on as well. So we're very, very aligned on that front.
Would you ever consider a strategic sale of the business? We've seen other cloud solution vendors get folded into more diverse, bigger companies with scale.
Yeah, so as a public company, obviously we always consider the strategic options for the business. I think when we look at the market, we're going after a $40 billion plus market when you think about all of the enterprises in the world that need to secure, manage, govern, and collaborate around their most important data. And we think the vast majority of that spend, that $40 billion plus, is going from on-premises systems to the cloud. And we have the leading platform that enterprises are choosing in that transition. So we think there's a significant amount of opportunity for us to be able to go capture as an independent company. But again, as a public company, we always have to consider our strategic options.
Have you held off any acquisition attempts or strategic partnership attempts in the last couple of years?
So we obviously don't talk about that kind of stuff, but in general, again, we're really focused on making sure that we can build a massive business for the long run, and we're always considering the best approaches to that. Ultimately, when we look at our customer base, 95,000 customers globally, 69% of the Fortune 500, we see a tremendous amount of opportunity both within our customer base as well as all of the new logos that we're going after to be able to sell the full breadth of our platform to those clients. And that's really what our strategy is very focused on right now. When we look at the growth rate of the business and when we look at what we're driving strategically, it's all about making sure we can sell the full platform set of capabilities to our customer base, and that's what will drive greater growth and profitability in the business.
Aaron, by what metric would you say that the market undervalues your stock? You started by saying that was the case. I mean, obviously, it does trade at a lower level than it did right after its debut, early 2015. But based on the fact that there's not been consistent profitability, how would you say that the market is kind of underappreciating what you're doing? And presumably, Starboard would invest because they have ideas that are different from what's already been done at the company.
Yeah, it's hard for me to comment on the market's kind of appreciation or not for the business and the value overall. I think in general at Box and what we're focused on is we know that there's a tremendous amount of upside based on both being able to sell our add-on products to our existing customers and new logos, as well as driving greater profitability in the business and getting more leverage. I think when you look at both of those dynamics, higher growth, higher profitability, that's what ultimately appreciates to the stock price and more value to shareholders. So, despite whether or not we think Wall Street undervalues us now, we know that there's a lot more that we can do as a business to drive and perform better, which ultimately then results, I think, in greater shareholder value.
Well, one of the knocks against it has been from the Wall Street community has been the enormous amount you spend on sales and marketing costs. So how are you thinking about that number, and how are you justifying that based on the fact that actually most of the growth, it seems to be coming from existing customers? while you are still growing your customer base, just not as fast as those marketing costs.
Yeah, totally. And I think we're seeing more efficiency as we continue to scale. So if you kind of look at any of our prior quarters or years numbers, we do drive greater and greater leverage within sales and marketing spend each year on a very consistent basis. So you're going to see more efficiency come out of sales and marketing spend over time. And ultimately, what we're doing right now is really focusing a lot of our efforts on making sure that we can grow and expand our existing customer base and their spend with Box. When we deliver the full portfolio of our solutions, we tend to see a 3 to 5x greater average contract value from customers when we're delivering the full value of our platform. So I think what you're going to see is we're going to be really, really focused on targeting our existing customers as well as new logos on growing the average contract value via the sale of our add-on products. And when we do that, we know that we get greater contract value, greater retention rates, and more efficiency as a business. And that ultimately then flows into profitability. So you're going to see that sales and marketing spend actually go down over time on a percentage of revenue, which again creates further and further leverage in the business.
Aaron, do you ever wish you weren't public and having to justify all these sorts of things despite great top-line growth? We had Slack numbers last night. The CEO was on Squawk Box this morning and kind of going through a similar set of questions. Top line's performing well, but we're giving you lots of heat about it.
I think it's totally fair to get that heat. I think, as a public company, we both deserve to be and expect to be scrutinized in how we're running the business and how we're scaling the business. That's what we signed up for. I don't regret, going public at all. I think being a public company makes sure that we have the right kind of operational capabilities, the right kind of accountability to the market. It forces us to execute at our best. And obviously, there are times where we feel like there's more we can be doing as a company, and it causes us to drive introspection in the business and make sure that we have the right strategy, the right product, the right go-to-market efforts. And what we're confident in is right now, and especially going into the second half of the year, that we do have the right strategy, the right products, the right team to go out and execute this.